India's financial landscape is buzzing with major developments, from billion-dollar IPOs to critical shifts in global energy markets. ICICI Prudential Asset Management Company is reportedly close to receiving regulatory approval for its substantial $1.1 billion initial public offering. The company submitted its draft red herring prospectus over 4 months ago, with the plan involving Prudential's sale of approximately 17.65 million shares, representing a 10% stake. This development is significant for India's financial sector, potentially bringing a major asset management player to the public markets and reflecting robust investor confidence in India's long-term growth story, particularly within its expanding financial services industry. A successful IPO could also establish valuation benchmarks for other private asset managers. If approved, this listing would attract both domestic and international investors, with its post-IPO performance influencing future public offerings in the Indian asset management space. Let's move to our second story, highlighting another potential public market debut. Indian online wedding matchmaker Shaadi.com is reportedly exploring an initial public offering, actively engaging with investment bankers regarding a potential listing. This move underscores the growing trend of successful digital consumer services companies in India seeking access to public capital. Shaadi.com's consideration of an IPO indicates strong investor appetite for established, profitable internet companies that cater to specific cultural niches. It also reflects the increasing formalization and financialization of sectors like wedding services, driven by the broad adoption of digital platforms. A successful IPO for Shaadi.com could pave the way for other niche digital platforms in India, demonstrating the market's readiness to invest in companies addressing unique consumer needs. Investors will be closely monitoring its valuation and growth prospects. Turning now to a significant development impacting India's energy security and global trade. India is actively seeking tankers to import crude oil from West Asian countries, including Saudi Arabia, Kuwait, Iraq, and the United Arab Emirates. This strategic shift comes as roughly a dozen vessels have been chartered this week to ferry oil across the Arabian Sea, following impending sanctions related to Russian oil. This marks a critical pivot in India's energy procurement strategy, moving away from Russian crude as the sanctions deadline looms. As a major global oil importer, India's sourcing decisions have substantial geopolitical and economic ramifications. Diversifying its suppliers is crucial for enhancing energy security, but could also impact logistical costs and supply chain complexities. This shift could lead to increased demand for West Asian oil, potentially influencing global oil prices and shipping rates. For India, it means navigating new supply chains and potentially higher acquisition costs, which could have ripple effects on its domestic economy. Investors should closely monitor global energy prices and India's evolving trade balances. These developments paint a picture of a dynamic Indian economy, with robust activity in its financial markets through significant IPOs and a critical reevaluation of its energy supply chains. Investors should keep a keen eye on the progress of these potential public listings and the broader implications of India's energy diversification efforts on global markets and its own economic stability. Drop your thoughts in the comments, and if you enjoyed the video, give it a thumbs up. Don't forget to subscribe and hit the bell icon. Thanks for watching. See you next time. This is not financial advice.